All right, welcome to another Easy Forest. And today's lecture is a continuation of what we did in the previous lectures. In the previous lecture, we spoke about position size calculator. I showed you how to calculate position size. And I also told you the importance of calculating your position size so that you can know what you are risking. One of the importance of calculating it is so that you can know what you are risking per trade. Now, many a times, people that lose more than they expected to lose never plan to actually lose that. Sometimes they don't even understand that some pairs are more volatile than some. If you are trading pairs like GVP, JPY, just a single move against you can be like a whole lot of pips compared to pair like Euro, GBP. You get it? So you don't really know. Sometimes you don't know how volatile a pair may be at a particular time. But with this pattern, you can easily get the exact loss size that you can use, and it will still give you the same amount you want to risk on that trade, no matter how volatile the market is at that particular time. That is a very good part of this calculating your position size. And in this case, the last example we did was we wanted to short. It was a bearish market. Okay, now in this case, let's assume we want to long. Now you come to your toolbars, come to your tools. Now, the first one we took short, but because we want to buy this time, you click on long, which is your long position. You put it on the chart. This is your target. The green part is your take profit. Now, this red part is your stop loss. Now, this is where you want to trigger the trade from. So you put the markets, you put this middle line at where you want to trigger the trade from. You put it at where you want to trigger the trade from, at the price. And this is the price we want to buy this pair from this particular price. We are just assuming, I didn't do any analysis to actually know if it's a buy market or a sell market, but we're not talking about entry here. We're talking about how to calculate position size. How to calculate position size. So for the sake of this lecture, let's just stick to it to be that, let's stick to it to be a bullish market. Now, this is where we want to enter the market. So this is where our stop loss want to be. So if you have gotten this, then this is the figure you need. This 214.3. 214.3. Now, let's go to. Now, this is the pair we are trading. The other time we trade a Euro card. So now, for you to get this right, the first box, you go and locate the pair you are trading. Okay, this is the pair we are trading. Okay, no, not that one. Okay, this is the pair we are trading. So we have done the first thing. We have located the pair. Please, if you use the wrong pair, you might not get it accurate. So it must be the right pair. Now, our account is USD. If your account is CAD or GBP or Euro, you can use it. But for the sake of this lecture, let's leave it at USD. Now, account size. What is your account size? $1,000, $10,000, $100. You put your account size here. Now, the amount you want to risk, is it 2%? Now, you can put it in currency. you can put it in percentage. Now, let's say we want to risk 3% of our accounts in this trade. You just put 3%. Now, this stop loss pips, this is where you get it from. That is this 214.3. 214.3. 214.3. You come and fix it in 214, 214, 214.3. Okay. Okay, like I told us that if it's a standard account, just leave this one. Just leave this one. You don't need to put anything there if it's a standard account. Now, you click on calculate. Now, for us to risk 3% of $1,000, we have to use 0.02 lot size. 0.02 lot size. Now, you go into your MT4. You go into your MT4 and make your entry. Okay? You go into MT4 and make your entry. Now, if you notice why I say that if we are risking small, it helps our psychology. Just imagine I am risking just $30 from a $1,000 account. So even if I lose the trade, I still have $970 left. Just tell me why my psychology will not be balanced. Now, somebody might say that, but it's too small now. 1,000, why, meaning that if I'm targeting 1:2, so I'm just making only $60. The truth is this. What I normally do, if I want to risk, let's say I have $1,000 account and I want to risk $200 for the day, I don't put them in one trade. Okay? Now, like this trade, I'm risking $30. I will enter another trade, risk another $30. Enter another trade, risk another $30, which is $90. Now, if I enter 6 trade, I'll be risking around that $200 with that 6 trade. And I will make sure I target 1:2, 1:2, 1:2 in all the trade. Okay, if all 6 trade goes to my favor, I'll be making good amount of money. Okay, I'll be making good amount of money from just that one day of trading. So it is better to enter small trade and enter many trade. Or let me put it this way, enter many trade with small amount. Many trade with small amount. It means that if you are risking $200, enter up to 3-4 trade and still risk that same $200. And if you are trading with the trend, it will be very difficult for you not to be profitable. If you are trading with the trend and you are trading 6 different currency per risking little amount, it's very difficult for you not to be profitable. Okay. Now, this is the same chart, the same time frame, and the same currency pair. Now, okay, so so you go to new order, we want to buy. And according to what we saw from the calculator is that if we want to risk $30, we have to use 0.02. You put 0.02. Now, you can put your stop loss order and your take profit, your stop loss price and your take profit price here. by, going to, you can do that from your, okay, let me just give you an instance. You can just put your mass like this on top and you write it out. Okay, you look at this level, this right level, you just write it at 2.02493. That is your stop loss level. But I don't really do that because it looks stressful. What I do is I'll just enter the buy position. I won't put anything here. I won't put any figure here. I'll just enter a buy or a sell. But for the sake of this tutorial, we are buying. Now, once you buy, you fix your loss size 0.02, you buy. Just right click on your entry and move it up. Okay, move it down for your stop loss. That is if it is a buy position you want to enter. You move it down for your stop loss, and your take profit, you move it up for your take profit. Now, it's vice versa. If it's a sell, you move it up for your stop loss, you move it down for your take profit. Now, you have already set your take profit and stop loss. Now, why I do it this way, it is easier than to start typing numbers and then trying to put it right. So this is what I just do. Now, there is no way I'm going to risk or I'm going to lose more than $30 on this trade. There's no way I'm going to risk more than 3% of my account on this trade. Since I have followed the instruction from the calculation 0.02, and your stop should be at this level. Okay, 0.02 and your stop should be at this level. Get it? This way, 0.02 and your stop should be at this level. So that is what I did in MT4 or MT5. So once you get this right, I tell you the truth, you will see the reason why you have been having unnecessary losses. Unnecessary losses is because you don't calculate your risk before you enter a trade. And now if you can get this right, your psychology will be balanced. Have you not noticed that it's whenever you are having a massive drawdown, you make more wrong decision? Yes, because psychology is a major factor in the market. So if that be the case, meaning that you have to learn to trade small. I mean, the more winning you have, the more confidence you begin to develop. Okay, that is all about calculating your position size. Please make sure you apply this in your trading. Calculate your positions, calculate them, know what you are risking per trade. Don't just trade in limbo. Don't just trade for let me just be going, let me just be going. No, you have to have focus, you have to be specific, and you have to take forex as a business. As we do so, I believe that your trading career is going to be smooth and you are going to be happy. All right. I want to appreciate you for coming this far, all the way from lecture 1 to this very lecture, from course 1 to this very course. So I believe that if you can practice all you have learned from this series, you are definitely going to be a consistent and a profitable trader. Okay. All right. Happy trading.